Hi, Tim Biggam back again this week for Delta Derivatives and looking at a market that still is trying to find which direction it wants to go. Certainly we've made a nice run off the lows here over the past week or so, but running into a little bit of a struggle here. So see if we break out to all-time highs or not. Again, we're above that 2080 level on the S&P, so above the old kind of resistance, 2090 at most. We'll see if we can break out above that 2110 level and scoot to all-time highs. Certainly earnings coming out okay here. Revenues light. I think we'll see that going forward as well as earnings can be manufactured. Obviously, revenue's a little more difficult to manufacture. So really seeing the VIX get trampled on here too. And short-term vol last week, the VXST, which is the 9-day implied volatility level, broke below 10, which was the first time since last Labor Day and one of the few times on record since they came out with this index several years ago. So I think a lot of traders long further out puts for protection are selling short-term puts to help finance that. We're really getting a steepening in that vol curve. So, you know, as we kind of tighten with narrower range and vol gets cheaper and cheaper, I think at some point just going along a straddle makes a lot of intuitive sense. It may not work out, you know, every time, but probabilistically, you know, buying vol at the cheapest level it's almost ever been at with a market that is poised probably at some point to make a big move. We haven't had any kind of movement at all. I think sets up for a nice trade. Again, it might not work out, but probabilistically, I like the trade. And trading to me is all about probabilities, not certainty. On a different front, again, I'm looking to be a lot more opportunistic than tactical, using the option scanning tools over at RB Trader to identify a lot of flow out there. Certainly we've seen some Chinese stocks have some big call volume coming in here over the past week or so. China is still on fire here, so we saw JMEI yesterday with some big volume stocks scooted up about $1.50 after they came in buying calls. So still looking to kind of do those buy rights where I'm buying the underlying shares, selling these comparatively expensive calls. We saw it on OC yesterday out in August, the at-the-money calls. Had a big buy of about 3,800. Implied volatility jumped up about 4 vol points, which is a big move for a lower beta stock like OC. So I simply bought the shares, sold those 43 calls, looking to capture about a 25-cent edge over where those calls were priced at just the day before. So with the stock up, normally implied volatility should come down, but implied volatility actually scooted up pretty well because of the big volume. So I'm looking for that to revert over the next couple days, leaning with the paper. So I'm bullish along with that call buying and just looking really to capture that implied volatility edge, take the trade off and move on. Looking at doing some calendar trade too out on Broadcom and Applied Materials as well. So until next week, this is Tim Biggam. As always, keep those position sizes in place and those stops going. Take care.